So to sacrificing partners capital account or current account in sacrificing ratio, being what? The adjustment made for goodwill on change in the profit sharing ratio. This is the entry that we have to pass. Treatment of existing goodwill. So how do we treat the existing goodwill is that it's going to be treated in this way, that if there is any goodwill in the company appearing in the books of the firm, so is written off by debiting it to all partners capital accounts in their old profit ratio and by crediting the goodwill account. So how do we do this treatment is that if there is any goodwill that is appearing in the books of the firm, right, that will be written off by debiting it to all the partners, okay, available in the capital accounts in their old profit sharing ratio. So it will be distributed on the old profit sharing ratio and by crediting the goodwill account. So the entry is what? All partners capital or current account debtor to goodwill account. Fine. So being what? With the book value of goodwill. So that is the entry that we have to pass here. Revaluation of assets and reassessment of liabilities is a next concept. So when revised values are to be recorded in the books of accounts, so how do we make it, right? So here an account titled revaluation account or profit and loss adjustment account is open for the revaluation of assets and reassessment of liabilities. So here you can understand that an account titled revaluation account, either it might be an account which is related to revaluation account, or it might be also related to what? Profit and loss adjustment account, which is open for what? The revaluation of assets and reassessment of liabilities. So here we have got a format of revaluation account. So how do we make a entry is that we have got the first basic thing is to draw the column and write the heading revaluation account. You should draw column for debit side and credit side amount, debit side amount. So particulars amount, debit side you can see that the amount that we have to enter is that to concerned asset account, that is the net, whatever the amount which has been given, we have to write it here, and to concerned liability account we have to write, and to all partners capital account should be written here. So profit on the revaluation shared in the terms of old ratio. And towards your credit side, here you can see by concerned asset account, then the amount should be written. So it's going to be net increase. The concerned liability account, again the amount has to be written, which will be considered as net decrease. And by all partners capital account, again the amount should be written. So loss on revaluation shared will be in the old ratio. When revised values are not to be recorded in the books of accounts, then what do we have to do, right? If partners decide to record the net effect of revaluation of assets and liabilities without affecting the old amount of assets and liabilities, a single adjusting entry involving the capital accounts of gaining partners and sacrificing partners is passed. So if partners is decided to what? Record the net effect of revaluation of assets and liabilities without affecting the old amount of what? Assets and liabilities, a single adjusting entry involving the capital accounts of gaining partners and sacrificing partners is passed. Accounting treatment of reserves, accumulated profits or losses. So let's discuss about this. Now here we have, if preference shareholders are discharged at a premium. So here we have got a entry here, preference share capital account debtor, right? Then we also have the book value should be with book value of preference share capital, whatever they have given that you have to write. Then realization account debtor, so it's going to be with a premium payable to preference shareholders. So that's the amount that the withdrawals we have to write. Then to preference share account, it's going to be the with total you have to write. Then if preference shareholders are discharged at a discount, the entry would be preference share capital account debtor. So the book value of the preference share has to be written. To realization account with discount, again to preference shareholders account is the entry that we have to pass. If preference shareholders are discharged at par, we have already solved problems on all these things, right? In case if the preference shareholders are discharged at par, the entry would be preference share capital account debtor to what? Preference shareholders account. So amount it's going to be with book value of the preference share, right? Then for making payment to preference shareholders, the entry would be preference shareholder account debtor to cash or bank account, that is with cash paid, to preference shares in transferee company, that is with issue price of preference shares given to preference shareholder. This is the amount that we have to write and record. Adjustment of reserves and accumulated profits or losses through capital accounts only. So under this you can understand that a single adjusting entry involving the capital accounts of sacrificing and gaining partner is passed when the partners decide to record net effect of reserves and accumulated profits, or what we call it as losses, without affecting the old figures. So here you can understand we have got single adjusting entry, and that single entry adjusting entry would be involving capital accounts of sacrificing and gaining partner is passed when the partners decide to record net effect of reserves and accumulated profits or losses without affecting the old figures. In case of profit, the entry would be gaining partners capital account debtor to sacrificing partners capital account. This is the entry that we have to make in case if we are making a profit. So in the case of loss, the entry would be sacrificing partners capital account debtor to gaining partners capital account. This is the entry that we have to. So by this we are going to conclude today's session. Thank you all.